Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in Rocket Pool and Ethereum. My name is Wack. Today is April 30th, and today's episode is going to cover an update from Langers on Saturn and other things. We're going to be talking about GMC updating some previous grant rewards and the staking. We're going to talk about Wanda telling the story of the exit arb for Constellation, how that worked out. On the Ethereum side, this is the key. We've got an update on the Pectra hard fork on Gnosis. We have got an update on Base and how they're developing. Blackrock is building more on Ethereum and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
Okay, as ever, we'll start with Rocket Pool news, and here we have news from Ken, and this was yesterday evening, saying that the community call will be starting in about 5 minutes, and that was 9 p.m. Eastern time, and this was a call with Langers. It's not always a good time for Europeans because of the time difference with Australia. It really is horrible in that sense, but this was a community call that took place, and there wasn't too much new information. Ken was kind enough to share the agenda of the call with me. So they talked about Saturn. Team made good progress in Saturn 1. Like they said, the DevNet 2 should be coming this week at some point. And then, the DevNet 1 was on February 11th. And then DevNet 2 will be on Hoodie. And the deposit queue on Hoodie is still currently 9 days long. So it's really bad. And then there's some info about DevNet 3. The work on that has already started. They're currently running, still latest is the 3 weeks behind schedule. This, was update that was given, and they just followed through that with that agenda. So kind of talked through this post that was made on the forum last week that we covered on Rocket Fuel. It looks like, there's not too much new information that came up in the call. Normally, Mav puts out a thread where people can ask Langers questions before the call starts. And this time, sadly, we didn't have that call. So we weren't able to we didn't have that thread because Mav went to Dubai for Token 2049. So we missed out on that. But otherwise, things are still chugging along, and there wasn't too much new information, sadly. Okay, here we have this post from Schifrin about grants and telling us about some changes that are happening with the GMC. For those of you who don't know, the GMC's treasury is denominated in RPL, and RPL's price has gone down a lot, which means that the GMC's treasury value has gone down a lot. So here Schifrin says the GMC has been meeting regularly to discuss soft cost-saving measures in light of the current state of the treasury, with approximately $180,000 worth of RPL available and $600,000 worth of reserved approved grants and bounties. So the GMC has determined it was necessary to review past rewards to ensure they still represent high value, high priority initiatives. The GMC has also discussed the possibility of implementing a deferral plan for future rewards, but have not decided to move forward with that at this time. So here there is rewards that are being revised. So there was a summit program, which was like an amount of money set aside for people doing meetups and getting paid for that, provided they follow like certain steps and procedures, like making it like inviting more people from the community, making it open for people to attend and all that kind of stuff. That was cancelled. Patches has a discretionary budget of $13,000 that he could give to people to do some work for Rocket Pool. That has been reduced by $9,000 down to $4,000. There's an incentives grant that was earmarked for AlphaGrowth, and there was $40,000 set aside for that. $10,000 was already dispersed, and $30,000 that was remaining. $15,000 of that will be going to Ronin, and $15,000 is being removed from that. That's being reduced by that much. And then here we have Star Initiative, which was allocated $209,000, and that has been reduced by 50%. and Shifting here says the adjustments total in cost savings of $129,500. And GMC will also be reviewing active bounties and updating them as needed. A follow-up post with those updates will be published in the coming week. So like Shifting here says, the GMC is kind of going through all of our awards that we've given out and trying to see what we can keep going forwards and what we can't. Right now it's focusing like this post, focusing on amounts that were earmarked for to do stuff that hasn't been used. So we are reducing those. And then the next will be bounties that are open that we will likely potentially close and changing some things as well. So I will let you know as those changes get announced. And yeah, it's just the GMC is in quite a tough spot right now. Okay, next we have an update from AlphaGrowth, and this was actually a really good update from Spartan. And Spartan says the update for the Rocket Pool community, AlphaGrowth was able to get Rocket Pool into Optimism's Futarchi campaign. It says we've received $100,000 worth of OP tokens to distribute within the OP chain and super chain. AlphaGrowth will distribute the rewards next month. You will soon see high yield opportunities for rETH. So this is absolutely awesome. Their first campaign actually was a huge success, and that I think was around 70,000, maybe that was 100,000 OP tokens as well. And this one again will be 100,000 OP tokens. We'll have to figure out what the best place to spend those. Halulu actually said this is more than a full month's worth of the IMC budget. Valdorf on the IMC as well saying sick, that's nice work. Me on the IMC saying amazing. Here Halulu ran the bot and worked out that it was about $80,000 basically that they're giving towards incentives for that, which is absolutely amazing. So yeah, this is a nice win for AlphaGrowth, and they've done a good job getting this money together. So congrats on that, Spartan, and I'm really looking forward to seeing what kind of boosted rewards we can get for rETH based on this. I think there'll be some good ones coming. Okay, next we have Constellation and their RPL was exited from their node. So there was it was withdrawn in these batches, but it was basically 400,000 RPL. 420,000 or 460,000, something like that, RPL was withdrawn from Constellation's node, and people have started burning it to get their RPL back. So yeah, here it is. Constellation Supernode withdrew 452,000 RPL worth 1,116 ETH. That's been withdrawn, and then people here, then there's more 10,000 more, and another 13,000 here as well. And then people started burning it. So here there was some nice burns. Yeah, so here this person burned 13,000 to get nearly 13,600 to get nearly 14,000 RPL back. And Dukey burned 2,200 to get 2,241 back. And yeah, there was a whole lot of burning going on for people getting their RPL back. So if you swapped your RPL for XRETH, then you can go to the Gravita website now into the Constellation section and use that to swap your XRETH back, XRPL back into RPL. So you can do that now. There was a little bit of worry about potentially this RPL potentially hitting the market and what that might do, but at the moment, RPL is up today, so hopefully it's not too bad, but we'll definitely keep an eye on that. Okay, another partner not partner quite, but a protocol that has reached out to Rocket Pool is MaderDAO, and that's with their Hermes. They've got their gauges launched, so they're highlighting protocols pushing better UX, composability, and interoperability across DeFi. So each one plays a role in improving interop, UX, DeFi, composability. Let's give them a proper shout out. So here the Hermes gauges, these are the protocols that they've got integrated on their platform. And there's Rocket Pool. So I posted a Rocket Pool card. Then there was Lido, Goggles, and Agio, Silo Labs, Arbitrum, Layer Zero, and a whole lot more. So it looks like they've got this little campaign going on of people kind of like showing that they are linked to the Hermes and kind of just trying to boost boost their visibility a little bit for their project. So yeah, that's you can go check that out. The link is in their description. Is app.maderdao.io, so you can go and have a look at what's going on with that. But yeah, they've got Rocket Pool's rETH on there, so that's cool. Okay, Hodja, a long-lasting node operator with Rocket Pool, exited all his validators, and he says the disappointing end to years of hoping and dreaming. He said, "End of an era, gentlemen. It's been a pleasure." And there's a screenshot of their Hodja's validators already exited and deleting the Rocket Pool container from their machine, basically from their terminal. So yeah, it was a real shame to see Hodja, long-lasting node operator, leaving Rocket Pool, but sadly, people, a bunch of people are doing this right now, so it's really sad to see. Okay, we've got some staking news here, and this is a post from Wanda giving an update on what happened with the Constellation exit arb. So they realized, basically a quick summary, you can read the whole post to get the details. They realized there was a way that they could stop public disbursement of funds on their node by locking down the admin and then using those keys to try to burn the rETH and exit arb. So they spent some time and they saw that, hey, this could be a good opportunity, let's do it. And then they did it. And what actually happened is the game began. So they put together a step. So you enable mini pool processing, process some mini pools to free up some rETH, flash loan the wrapped ETH, buy rETH at the discount, burn the rETH at the native asset value, repay the wrapped ETH flash loan, disable mini pool processing, and repeat that as many times as possible until the rETH discount was gone. If that worked, they were in the money, but there were some serious challenges with this in the real world. So they were on a timer, the discount was shrinking, and no one knew how long it would last. And then they only didn't have the tooling ready. The only existing contracts that do exit arbs are Uniswap or Paraswap, but rETH's liquidity is on balancer. They have overriding directive for NodeSet saying that security of Constellation admin address cannot be put under risk whatsoever. So they started work on that with the different parts of it. They realized that there was a decent amount of ETH to be captured, so it was worth trying to capture it. And then boom, there was a headshot. So they got everything ready. But it seems like with the way that some of the keys were set up, someone had used the admin council signatures to open up the processing, but then they did a bunch of arbs without closing it. So they were able to execute that transaction through the safe, and they prioritized speed. They used Uniswap instead of balancer, but so they probably lost a chunk of ETH. And it's likely they manually included signatures to open processing in the first ARB transaction, then quickly removed it and turned on their bot again. They were quite lucky that no one else had their bot online, because if they had the completion of those exit ARBs, they might have only captured the ARB for the first few mini pools, but in the end, that got them. So the aftermath was that the NodeSet guys didn't actually get any ETH from their actual trying attempt to exit ARB, but the person who did kind of front run them was nice enough to send the admin address some winnings, which was good. And yeah, we were trying to guess on who the person was. I was thinking Ramana, but maybe not. Other people had some of the guesses as well, and yeah, there were potentially dozens of ETH available, and then Halula was trying to see how much ETH there might or might not have been, and it turns out that there was approximately 30 to 50 ETH available potentially, and that person ended up sharing about 5 ETH with the NodeSet guys. It seems like they probably, because of the inefficiencies of how they did it, they probably got somewhere between 10 and 20 ETH. So that was pretty nice for them. But yeah, if you want to read about it, then you can read through the post from Wanda, but it's definitely quite interesting. Okay, let's move on to some Ethereum news now. And what I think is big Ethereum news of the day is that Gnosis underwent the Pectra upgrade, and it went flawlessly. and everything went really well. So Gnosis has now undergone Pectra. So Gnosis, for those of you who don't know, is another blockchain that is a fork of Ethereum, and they actually tend to undergo the hard forks Ethereum does about a week before Ethereum does. It's kind of become a testnet of sorts, the last testnet for Ethereum before it comes to mainnet. And with Pectra undergoing everything on Gnosis flawlessly, that is a huge positive that everything will go well on Ethereum next week. On the 7th of May. And here was Fizz sharing the good news about Gnosis's update of that. So yeah, very exciting stuff there. Okay, in more clear Ethereum news, here we have Base. The bigger announcement here from Base was that they have reached stage 1 decentralization, and they're building the foundation for a truly open global on-chain economy, which of course all sounds really good. It took them a while to reach stage 1, like especially when you think that Kraken's Inc. came online with already being on stage 1, and the OP had the tooling available for their super chains to reach stage 1 already. So it took them a while longer. Like, I was expecting this in December, maybe January, pretty much at the latest. But now we're at the end of April, about to start May, and we finally see this going live. But the good thing is that they've done this, so they've reached this by launching permissionless fraud proofs, increasing the decentralization of our contract upgrade process with the Security Council. So this is great. I replied by saying, great, now let's go for stage 2. Of course, we want all of these rollups to be stage 2, because that's the point where all the exits are working. We've got all this, as much stuff that is permissionless can be permissionless. That is really, really what we want to see. But this is actually really good that they've taken this step and now reached stage 1. The next step is when stage 2, and that of course depends on the OP superchain as well. But here Thomas kind of shared the same sentiment as me, saying congratulations to Base, win together, next milestone is stage 2. So we're already looking at stage 2 now to see when that will be coming, and we're really hoping that will come hopefully before the end of this year. I'm really hoping that we see that happening. Now there's a chance that it will be Arbitrum that reaches stage 2 first, potentially. There's some technical difficulties about ossification of the chain and slow upgrades that you need to do, time locks basically, that can get you to stage 2 as well. And it seems like that is something that teams are quite hesitant to do just yet, as far as my understanding goes. And I'm sure there's other factors as well, but I saw someone put out a tweet a few weeks ago, maybe a couple of months ago, saying that there should be a fork of Arbitrum that changes that parameter, and everything else is the same as current Arbitrum, and they call that the stage 2 Arbitrum, like whatever name they want to give it, like no Neo Arbitrum or whatever, and that would then be stage 2, and then you let people decide whether they want to be on stage 2 Arbitrum or stage 1 Arbitrum, with the one that is under the admin control with certain aspects. They would say that they're not quite ready for being stage 2 yet, but let the people decide on whether they want to be on the stage 2 Arbitrum or stage 1 Arbitrum. But that's a side here. Base are moving. What's really interesting here is that a lot of people had said that Base is a Fed chain, and Base is never going to decentralize, and they are just exploitative and extractive to Ethereum. And they don't want to do what's in the best interest of Ethereum. But it looks like that has proven to be wrong, at least so far in this instance. And it looks like they're on their path towards a stage 2 decentralization, which is what we want to see as soon as possible. Okay, next we have an update from Vitalik, sharing some personal ideas on what he's focused on in 2025. And he says it should be predictable from the things that he's done and written, but it's worth restating. So he says for Ethereum particularly, he is focusing on the L1 long-term roadmap, things like single slot finality, long-term virtual machine, statelessness, security, resilience, decentralization. And he's also focusing on the full stack security, so making sure everything is open source, and also focusing on privacy, ensuring Ethereum is usable in a way that's highly secure, free of centralized intermediaries, and privacy friendly, including higher up the stack, such as apps and wallets. With the big picture DAC stuff, he wants to focus on comms tools, info and social layer, and cryptography, operating systems, hardware, physical infrastructure, biodefense, and then he says other people are doing some really cool things, and here we have people like Ansgar, Dankrad, and others who are working on the short-term scaling of Ethereum. One of the things they're working on is, for example, 10x the L1 gas limit in 2026. And then there's peer-to-peer block construction, other research areas. Xiao Wei and Thomas are leading EF matters, and proven app layer categories such as DeFi payments and savings, etc., are working there as well. So Vitalik's less involved in those day to day, but others are taking the lead there. So it's really cool to see Vitalik here now is focusing very much on long-term research of putting changes into Ethereum, also like philosophy of Ethereum stuff, which is really cool. But it looks like Vitalik has relinquished almost all day-to-day work in terms of managing the Ethereum Foundation and other things like that. So that's really cool to see. Okay, now this news would have been the first news of the day because it's absolutely gargantuan, but it might, there's a reason why it's not. So here, this person, ETF Hearsay by Henry Jim, is saying that BlackRock have filed for a digital share class, DLT shares, of their $150 billion money market fund, not as an ETF. So let me make that clear. This is $150 billion. So their BUIDL fund right now is over $2 billion on Ethereum. This will be, 30 times, not 30, 50, 75 times bigger than that. Sorry, I had to do mental math there for a second. Yeah, 75 times bigger than that. And, people right away started saying, the ticker is Ethereum. This is going to be on Ethereum. But people weren't sure whether or not it was going to be on Ethereum. Hani Abu replied by saying that, it's likely to be Ethereum, but they've not confirmed it explicitly yet. Now, here, Harvey Milk shared a screenshot saying that this is, in partnership with BNY Bank, and they'll select a fund accounting data to the Ethereum network. So that's maybe where, these tokens are going to end up. Now, one of the heads of digital assets, I think, or some person who's kind of higher up at Blackrock with the crypto team, said that the place where people want their assets is on Ethereum, and pretty much Ethereum only. And that's because it's the most secure and it's the best place to put their assets. So putting all that information together, it really does look like, this $150 billion fund is going to have their tokens on Ethereum, which is absolutely amazing to see. I'm really, really excited about that. The thing is, again, this is like in a real world asset class. It's not native crypto tokens. Now, when will we start seeing the actual tokens being on Ethereum? That I think might be a little bit a ways away, but hopefully it will be here very soon. That is, kind of what I'm hoping for. But the reality is that, we still we're still a ways away from that. But at the moment, stable coins, real world assets that, exist on bank ledgers are being able to move around on chain. And now with funds like these, BUIDL fund and now other funds, these are going to be coming on chain. I honestly, sincerely believe that we'll have $1 trillion worth of real world assets. That's including stable coins and all these kind of funds on Ethereum by the end of the year. What's really interesting is Hogan, I forgot his first name. The person who works with Bitwise said that someone asked them in an interview today that I saw that, very soon we'll have trillions of dollars worth of assets on Ethereum. And he said, when the person asked the question to the Bitwise head of blockchain stuff, when is, what's going to happen first? Are we going to have $1 trillion of assets on Ethereum first? Or are we going to have $1 trillion? Is ETH going to be worth $1 trillion as a token? And Matt Hogan, that's who it is. Matt Hogan. Matt Hogan said that basically ETH, the asset, is going to catch up fast. And he expects there to be trillions of dollars worth of assets on Ethereum. I was saying, for a while that we'll have $1 trillion worth of stablecoins on Ethereum after getting stablecoin legislation in the US. I said that would happen by the end of 2025. I would not be surprised if we had over $500 billion worth of stablecoins on Ethereum by the end of 2025. With these other, treasuries and stuff, this is how we get to that $1 trillion of assets by the end of this year on Ethereum, which is absolutely incredible. I'm really looking forward to seeing how that plays out. Okay, and here Eric Connor kind of like puts it in perspective. He says Ethereum just scored a monster win. BlackRock filed to tokenize its $150 billion Treasury Trust money market fund with a new DLT shares class. BNY Mellon will keep a blockchain mirror of every share on chain. Biggest real world asset flow to Ethereum yet. I said Ethereum is going to eat the world, and other people then started commenting on that as well. So yeah, this is really big news. Awesome stuff. Okay, Vitalik again today. And Vitalik has a post on Ethereum Magicians about formalizing decentralization goals in the context of larger L1 gas limits and 2020 era's tech. So Vitalik, actually, this is a really cool post. Vitalik's talking about, raising the L1 gas limit and how that will that's larger increases that have been proposed, and the hardware and bandwidth requirements will increase. So Vitalik then kind of divides out into three categories. He says today we're paying the cost of low node requirements and low gas limit, but we're not actually getting the benefits, wide scale personal full node operation. And then Vitalik says 2010s era thinking assumed symmetry between block production and verification. He says you can only verify by re-executing, which implies one class of node. Newer 2020s era technologies such as accessless, stateless, and ZK proving all break that symmetry and have the format of one powerful actor doing more work to make verification much easier for everyone else. And the newer block building designs also introduce new forms of decoupling, e.g. breaking up transaction inclusion authority from optimal block building. And we're already doing this to some extent with MEV boost, where relays and builders are making the blocks, and then they're giving these to node operators, who are running validators, and then they take that block from MEV boost and then propose that block. So the decoupling of block building and node operation, making sure that everything works well, is already happening to some extent. Anyway, here Vitalik then says all these factors hint the direction of more heterogeneous architecture, where some nodes become larger, but in exchange the ability to ensure core guarantees becomes accessible to many more people. So he has three ideas here of the different kinds of nodes that you'll have. So this will be the first will be a light node. So this is just to verify the chain, and he sees this being like a web app or some kind of really easy to use tool that you can run on a smartwatch, that you can just build in browser, that's just running as part of your browser, and mobile wallets can run those as well. And then he has a medium node. So this is a node that are testing and staking or doing fossil work. So it should cost about as much as it does now, maybe a bit more, but not too much more. And then the third one is the heavy node, any type of node that Ethereum has a one of n assumption, e.g. optimal block building, proving, etc. So this can be more resource intensive because on the whole network, you just need one of them to make the whole network honest. And you'll have lots of them, redundancy hopefully. And then he says we still need to put some limits to ensure competitive market. So that's something that will happen there. The thing that he says that getting the hardware shouldn't be too bad, but the issues are with bandwidth and how we can change bandwidth. So he says in general we should probably conserve bandwidth, be more conservative on bandwidth than on hardware specs, because that's in different places around the world. Bandwidth hasn't caught up. So by increasing the bandwidth demands too much, that is at the point where you are kicking off a lot of people potentially from the network because they just can't upgrade the bandwidth because the infrastructure doesn't exist. Whereas updating hardware is much more trivial comparatively speaking. This was got quite a lot of response, with a lot of views, and people started replying. You can read the different points that came up and areas of discussion in the link below, and go check it out. Okay, so yesterday we talked about EOF and how it looks like there was some controversies around it. There was some, because it seemed like some teams wanted it to go into the protocol, and others were saying that it shouldn't go, and then it was decided that it won't go into the protocol during Fosaka, but it's not being cancelled outright necessarily, but it looks like it won't be included at any point soon. So Portus here, who is a core dev, says, I don't think there's any need for Tim Baiko to read this, but anyway, there's a lot of anger on this confusion and even disheartening at the EOF situation. He said, but I haven't heard any single person blaming or even insinuating that Tim acted incorrectly. the whole process broke. So Danger asked, what broke? A lot of people were against the EOF, and it was taken out for what seems like good reasons. Seems like it was a good process. So POTUS says a few informed voices, notably Paradigm, Viper, and a few other devs, had some technical arguments opposing it. Then a lot of people that admittedly don't know what it is jumped on that train. The call shows a clear divide, with most core devs on client teams on one side. So it seems like there was a divide, and a lot of the stuff that came up really late should have been brought up much earlier, and I could have had a much longer and better discussion about that because of it, but it just didn't happen. And then POTUS then replied again saying, regardless of right or wrong, having a large subset of the client devs feeling frustration or even anger is not dismissible. It makes for an unhealthy work environment, one that is already stressful. This has to be addressed urgently. And he says it's hard to attract talented devs to do core work, and this makes it harder, and it's not long-term maintainable even if you decide to ditch entire clients every few years on beam chain like forks. So this is an interesting perspective, and one that I wanted to bring out, that even though EOF is unlikely to go through, people had been working on this for a long time, and they felt like it was good, I guess, even though people were saying that it might not have been good. And I think they're feeling like the work that they're doing has not shown up. Now, the argument is that you want the protocol to be as good as possible, as strongest as possible it can be, and if that comes at the cost of EOF not being included, then so be it. But I think it only takes a moment to kind of realize that there's real people behind the work here, and if they're disheartened, that might lead to less good quality work happening later, or getting better devs coming on. Julio here says, I think I've never seen so many pissed core devs at one time ever. He says, my DMs are a nuclear wasteland. Porter says, same. It's really insane and not something to take lightly. So yeah, I think there's a lot of lessons to be learned here for the Ethereum community about what the process is for getting EIPs included into hard forks, and I know that this work to revamp that whole process had already begun, and hopefully people can be on the same page going forwards. Okay, I want to share this post from Clouted that I found really interesting, and I really like it. And he says, I personally run out of fucks about what the EF says on majority of the ETH bros at this point. He says, in the end, it's inevitable. There was never any ETH identity crisis or narrative crisis. They simply lose the vision, then only to see it when it comes around again. He says, it was always the most superior form of money, store of value, collateral of the internet, and always will be. So this is the argument that's kind of come up in the last couple of days about how we should value ETH, and that one camp is saying that, we should lean more into the ETH is money aspect and a store of value aspect, and that is the thing that will give ETH the most value. Another side says that ETH lean too much into this idea of earning income, being able to do analysis on that income to see what the worth should be, and as the burn basically kind of allowed those numbers to even work, because the burn isn't working that well at the moment. That has kind of destroyed the value of Ethereum in the eyes of people who started using that metric. Now, Clouted here is saying that we should go back to the money aspect of it, and it writes a really good post here about don't let VC psyop you, and this is what Ethereum has always been about, and this is what it will be about, and that's what it should be. So this is a really nice post here. There was a Bankless episode today where David Hoffman, John Charbonneau, Bread, and someone else who I forgot the name, they were talking about what kind of how you should assess ETH's value, and there was an interesting point from Bread on that call where he said that ETH should be a smart contract platform first and foremost, and it should be the best one that it could possibly be. And when the world is transacting on Ethereum, that is the point at which you really start promoting the moneyness aspect of it and the store of value aspect of it. Because right now, if you try to push this narrative of ETH as money and the store of value, Bitcoiners will be like, "What are you talking about? You've lost 80% of your value against Bitcoin, or whatever amount of value that we've lost against Bitcoin, since the merge." And the main focus should be getting ETH to be the best platform possible. And once we get in there, then focus on that. There were some good points. Like I said, follow these discussions on your own. But I'm a huge fan of ETH is money. I still like the triple point asset. But yeah, we're still trying to figure out, I think, the best way to present Ethereum, ETH the asset. With the Ethereum side now, I think we're getting like some good cohesion. I've seen a lot of people saying that, the roadmap of Ethereum is 1, scaled L1, 2, scale blobs, 3, increase UX. Like 1, 2, 3, bang, 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 scale L1, scale the blobs, improve UX. Amazing. Like that is like so nicely succinct now. And like you can really get people on board with that roadmap for for Ethereum. Now the thing is, like, how do we talk about ETH the asset? And that conversation is still ongoing, and one that I'm going to be following very closely. Okay, next I want to cover some drama that's happening in Bitcoin land, and this is by Carbon, saying that some heavy drama going on in Bitcoin Maxi World. Core devs want to remove the arbitrary data limits on op return. So people are not taking it well. So it seems like there's a divide between people in the some Bitcoin developers and Bitcoin Core. So Jason Hughes is one of these people who's saying that Bitcoin Core is about to merge a change that will make Bitcoin worthless. And also a post here saying that basically this will allow things to happen to Bitcoin, and Bitcoin is going to become shit because of it. People like Udi and others have said that you guys are crazy. Like, what are you even talking about? And there's actual drama brewing here. Someone asked Grok, because I'm not deep in Bitcoin land, Poopster asked Grok, like, can you explain what happens? So basically, Grok, I don't know how accurate this is or isn't. Grok says that, with the writing a transaction to Bitcoin, you can write a small note up to 80 characters, and this is called OP return. And some folks want to remove that size limit to allow bigger notes. And with bigger notes, you can start posting more data to Bitcoin. And I think this is kind of an extension of what we saw with ordinals. So it makes sense that people like Udi and Eric Wall and those guys who kind of made that push are supporting this as well. But it looks like there's a real divide right here. The person, Jason Hughes, in the previous screenshots actually said so much as if this goes through, he's going to sell all his Bitcoin, because that won't be the Bitcoin that he believes in anymore. So there's a chance that, there's big drama brewing here. So I want to put that onto your radar just to let you know that, not all is good in Bitcoin land either. Okay, and I'm going to finish today's episode with some news that came out today about the economy for Q1, and this looks not good. So the actual GDP growth for the US in Q1 was actually minus 0.3% versus 2.4% in the previous quarter. The estimate was minus 2, so the economy shrank at a rate faster than what people were expecting. This isn't good. Because it makes the chance of a recession much more likely. Now, people are saying that this is the Q1 data. The Q2 data is going to be even worse because it was April 2nd, the second day of Q2, where Trump introduced his tariffs, and that is where the GDP is going to contract even more. So with that said, technical recession is two quarters in a row of the economy shrinking instead of growing. That's a recession. So here, recession risk surges. So Kalashi is now showing a 74% chance of a US recession in 2025, spiking this morning after a surprise GDP print. So the numbers, like I said, it was plus 0.3% expected, and it came in at minus 0.3%. So that was a 0.6% swing in terms of expectations and reality. It seems like the markets haven't responded too strongly to this, especially in the crypto markets. Things are down a little bit, but not, hugely down, especially since it makes recession more likely. But that's another thing that we're going to be following, because these kind of macro news really do impact the crypto markets, and I'll be talking about that when the time comes. So on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and I'll see you tomorrow. Bye.